Hey guys, Czar here, back with you. Watch this. We just had this short trade, or I just had this short trade. It was about, I don't know, half an hour ago or so. This is a 30-minute chart. You can see where I entered profits. Let me show you the shorter time frame, and then rallied up from there. Got out just in time. Looking to take the identical trade again. Here we go. Watch this. On the flip, guys, on the flip of the body. If that body flips, when I say identical, it's, I don't know, half a point away or a pip or two. Looking for the flip now. Bear with me. I'm just going to my own platform here. And sell stop, guys. Sell stop. And in, guys. In this trade now. Short. Same target as before. It'll be about 24 pips. Okay, my entry was actually a little bit 44.70. Yeah, that's close enough. Over 23 pips here, guys. 23 pips. That marker, it looks huge. My stop will be in the same position as the last one was, just to keep it artistic. It's a fair place. This is slightly less than a 1-to-1. It's a 0.9. And nothing wrong with that, guys. This is again pre-New York. It's 9:12. There's about 17 minutes until New York opens. Regular trading hours. This is not an index. This is gold, right? I wouldn't trade an index typically at this time right before they open. It's just not worth it. It's a gamble for me, and so I just don't do it. But I will take gold running into the open of the New York session. Second trade of the day. First trade, you can see it. It's sitting underneath this one on that prior candle. Now let me just take you back to the main trading screen so I can show you why I'm doing this, right? I explained it in the other video that's beside this one. Will be beside this one. See it there? Oops. So this is a marker that I used so that my group could see. I'm just going to actually bring this one up to that one. There we go, guys. Right there. That's the actual marker. All right. Watching now. Being patient here, guys. So what's the idea? Pardon me. I was going to explain that to you. So if you saw the last video, you know exactly what I'm going to say. It's the one beside this. But if you haven't, it's this rejection on the daily at key resistance that goes back right back to here and about 2 weeks ago right here. Okay? Rejection wick, bearish candle, flipping blue. Blue is a bearish candle in my color scheme. And then, of course, rejecting from key session resistance from back here in the Asian session. This is still the UK or London European session, and we're about to go into the New York session, at which point the background color will change to this dark blue. You see this Asia, Europe, New York. We haven't got there yet because we're still 15, 16 minutes away from it. So that initial trade idea that was off the 8:30 news, ignored the wicks, entered short, which then retraced and consolidated, got all kinds of messy in here, organized itself, sorted itself out, now has an opportunity for a continuation in the original direction. The original direction is the impulse wave down, the retracement up, and then continuation for a zone completion. Now I'm not looking for a full zone completion move, which would take me all the way down to this support area here on this left-hand chart, right, the 30-minute chart. I'm just looking for kind of a partial wick fill here Just trying to get back to call it a wick fill on this one here, but not even all the way. We're just going to go back to where we were before. But this time, it'll be 23 or 24 pips. Let me just check my own platform. Yeah, 23 pips. Assuming we get there. Watching closely now, patiently, guys. It's the same idea again. Nothing wrong with doing that, guys. It can be quite beneficial. And there we go. 23 pips, second trade of the day. Both of them gold. New York hasn't even opened yet. It's been a good morning so far. I'm going to make sure I take it easy and look for only optimal setups like these in the New York session. I encourage you to do the same. Have an amazing day, guys. Thanks for joining. Click the like button if you will, and we will see you a bit later. Take care.